August 7th, 2024. Coming in today, we had a pretty good gap up into basically the area of yesterday's high. I am going to turn on the study for the past couple of days bar counter. So coming into the day, you can see that we have a wedge, 1, 2, 3, 1, 2, 3, and we got a big reversal down from the wedge. And then we have a big gap up towards the top of the wedge. So the question becomes, are we going to get a breakout to the upside and a measured move up? Or are we going to get a failed breakout above the wedge and a reversal back down like we ended up getting? I thought that we went further down today than I was expecting us to. And you can see we got near yesterday's low. And we almost went outside down. I think we got within 2 ticks-ish. Yeah, so you can see the 4 low is just slightly below the bar 78 low. And, if you look at basically ever since we had this big gap down over here, market, it's been in a weak bull channel for a couple days, and then this seems like it's converting into a trading range. So really, what you have to be expecting is we had for a long time. Let me see if I can zoom a little further out. Actually, well, this is fine. We were basically creating a trading range up here, and now it looks like we got this big gap down. We've obviously filled in the gap, but it looks like we're going to start creating a trading range in this area. So again, where does the bottom of this trading range? I think everybody is pretty confident in the fact that we're going to 5,000. It's just a matter of when. I'm not sure it'll be all that soon. I don't think this is the start of the move down to 5,000. I think this is a leg in a trading range, and tomorrow we will get another leg in a trade within the trading range, and it'll probably be more of a bull leg. The reason I say that is because when you have a bear trend day like we had today, there is a 75% chance on the following day you're going to get 2 hours of sideways to up trading starting by the end of the second hour. Bar 1, a bull bar with a tail on the top and the bottom. Again, we're in an area where there's probably going to be some sort of selling. This was really strong, and this is going to get a second leg. 72 through 79 is going to get a pretty strong second leg, most likely. Maybe it got it in Globex, but I tend to ignore the Globex because I don't trade the first couple of bars of the day. So I just think of this as a big bull bar and a bull surprise. So for me, I think that we're probably going to find sellers somewhere up in this area. Does that mean we necessarily go down? No, we might just go sideways. We ended up getting obviously a head and shoulders pattern, but you could argue it's just a failed breakout above the wedge. Really just depends how you want to look at the pattern. Bar 2, a bull bar, but a big tail on the top. So this is not all that strong. 1 and 2, yes, consecutive bull bars, and we're probably always in long from the gap and the follow through. But again, if you just look at this, does it look like it's going to be a huge bull trend? No, it doesn't look like it's going to be a huge bull trend. It looks like we're going to develop into some sort of leg within a trading range. So probably, not the best idea to be buying close to 2 or to be buying above 1. Bar 3 is an inside bar, so it's a high one for the bulls. So you can see 2 broke out above yesterday's high and triggered the buy above the wedge and the breakout above the wedge. In general, a breakout above a wedge has a 50-50 chance of success. Here, I don't know, it might have been a little bit lower because we did get the big sell-off. But you could just look at it as yesterday's high instead of a wedge if you want to do that as well. Again, the prior day's high and low is a common area for reversals. 3, an inside bar. So high 1 for the bulls. What do the bears see? Well, they're hoping to get some sort of higher high double top and basically some sort of early bull trap for a potential high of the day. Bar 4, it's follow through for the high 1. But again, look at these 4 bars. Does this look like a bull trend to you? No, it looks more like a leg in a trading range. Bull trends are going to have bigger, stronger, better bars. Look at the bear trend, how it starts here. Keep in mind, this would be the start of a bull trend. And this is the start of a bear trend that ended up going pretty far. You have pretty good bear bars. Here, these are not very good bull bars. There's tails everywhere, so it's really not as good. You could argue that this big bull bar was the spike, and now we are in the channel phase of this bull trend. And what usually comes after a spike in a channel? A trading range, because the market cycle is spike, channel, trading range. 5, another bull bar. So you can see, again, tails on 1, tails on 2, tails on 3, tails on 4, tails on 5. Basically, body size is getting smaller ever since 2. This is not very strong. So one of 2 things is going to happen. We're either going to get a breakout to the upside with follow through and a bull trend from the open, or we're going to get some sort of reversal down and then maybe a trading range or some sort of bear trend. thought today had potential to be a trending trading range day. I was not all that convinced that this was going to turn into a big bear trend day, but obviously when things like this happen, it becomes, relatively undeniable that that's what's happening. So 6 outside up. I thought 6 was an interesting bar. This is the kind of trade that I think you get caught in a lot as a beginner. If you're just starting out trading, you see a bull trend and you're waiting for a bar closing near its high to buy, and then you get it on 6. You say, great, now I'll buy. And then you buy and you're confused as to why bar 7 happened. But the reason it happened is because this is a breakout attempt. You're buying a breakout attempt. You're not buying a strong breakout with follow through. So this is trying to break out above these highs. It's trying to break out above the channel and get, turn it into some sort of measured move up, probably based on the height of the wedge. So if 6 gets follow through, very likely this is the low of the day. On the close of R6, what are the odds this is the low of the day? Probably, I don't know, maybe 60%, 50. Well, 50-50 chance we've seen the higher low of the day on the close of R6 on any given day. So figuring we've had only bull bars so far today, you could definitely make an argument. There's 60% chance we've seen the low of the day. Or sorry, we've seen the low of the day. So 6 is a breakout attempt. When you're getting weak bars like this, 3, basically, 1 through 5, none of those were very strong bars. 2 was, it had a bigger body, but still a really large tail, nothing particularly great. And then you get an outside up bar like we do on 6, a clear breakout above that channel line. This is not as high probability as it seems. So if you're buying up here, you might be buying some sort of second leg trap. So 6, in essence, is a second leg trap. We pulled back below 5. There's going to be buyers below 5 after 5 straight bull bars, but it's probably a scalp. And the scalp on this size, in this day, 10 points is a reasonable scalp. But buying, below here is probably just a 10-point scalp. So those traders are probably not holding much of their position for a swing. And if they are, they're going to be quick to get out. So you can see bar 7, bear bar closing near its low. Well, if bar set, so first off, again, if 6 is a second leg trap, then that makes 7 a credible sell for the high of the day. The problem with selling 7 is you're selling against 6 consecutive bull bars, but you can definitely take the short on 7 and take a chance that we've seen the high of the day. So possible nested second leg trap, but if you're selling 7, we're not going straight down. So you cannot sell 7 and get out above 8. That you're taking a chance that we've seen the high of the day. And so as long as we do not run that stop, then the premise that we have seen the high of the day is still a valid premise. And so again, 1 through 6 is strong enough to get a second leg up. So we're probably getting that second leg up. And that's probably what bar 8 is. So low 2, short 7, and then the reversal up on 8. But you can see we're just testing into the area of 6, and then we're starting to find sellers. And I wanted to go on a bit of a talk about how, there's a really big difference between knowing how to read a chart and how to very profitably trade stocks. I've gotten comments before about like my reviews being more helpful than like Al's, and it's very much not true, or it might be more helpful, but it's only because I'm a much worse trader. And you might hear me talking about chart reading and stuff, and it sounds like I'm some genius trader, but the reality is my chart reading skills are pretty good, but you have to develop the chart reading skill before you can develop the trading range skill or the trading skill. So if you listen to my review and you listen to Brad's view, they might sound pretty similar, but if you looked at my trades and you looked at his trades, you wouldn't think you're looking at the same person, even remotely. And the big reason for that is because it takes a lot of years to develop the chart reading skill. But then after you develop that skill, you have to still spend more time developing the trading skill. And even if you're good at entries with the trading skill, you're still going to have difficulty with management a lot of those times. I bought bar 4 yesterday on the premise that we had seen the low of the day. And I thought there was a reasonable chance we were going to get to this low. That's exactly what we did. And I sold bar 7 today, taking a chance that we had seen the high of the day and that we'd get at least a measured move down to this area. I thought this was a little bit further, a little bit out of reach, but I thought we might at least get down to this area. And I'm at a net loss between Tuesday and Wednesday because of, just mismanagement and then second guessing your premise. So things like that. So there's a really, if you trade for a long time, so if any of you, I don't know how long any of you have been trading, but if you're at around the 3.5 to 4 year mark, you probably will start to notice that you're getting a pretty good handle. I would say at least the 3 year mark, maybe the 3.5 year mark. You probably start to get a pretty good feel as to what you think is going to happen during the day. but you'll find you're not able to capitalize on it. And your premise is correct, but you get shaken out of the market, etc. And you only get better at reading what's going on, but there's still going to be a long period of time where you're really good at reading what's going on in the market, but you're just not quite able to capitalize on it in the way that you want to. So all this to say is that after 3 or 4 years, you might be very frustrated with the fact that I'm at basically 5 at this point, but after 3 or 4 years, I remember the past year. I don't know. It doesn't frustrate me anymore, but I would say 2022, very frustrating time, because I was starting to get good at reading charts, and I just could not figure out how to make money. And Nat, you got to realize it's part of the process. And Brad had mentioned it before, and so I knew it was part of the process. But it's just a little different when you're living in it. So, anyways, I was on bar 8, a bull bar. It's a high 1 for the bulls. I thought 6 was a second leg trap. You could also look at 8 as a second leg trap. I don't think either of those is wrong, because some traders would look at bar 1 through 5 as the first leg and 6 as the second leg trap. Other traders would look at 1 through 6 as the first leg up, 7 as a pullback, and 8 as the second leg. So it's a possible second leg trap as well. So, either way, for the bulls, it's a high 1 buy, but it's not a good high 1 buy. I think the best case scenario for the bulls here is you're buying the high of the trading range, and you don't really want to be doing that. If this was going to be a bull trend, then they should have some sort of open gaps. Bar 6 should have gotten follow through. We should have, some sort of strong consecutive bull bars. And the bulls have a chance to create strong consecutive bull bars if they can get another strong bull bar on 9. However, if you get a high 1 at the top of a probable trading range, what's probably going to happen? There's probably going to be sellers above it. And that's exactly what happens on bar 10. So again, you can sell 7, just don't get out above 8. And you have to probably hold until at least 15. I think 15 is tough, but regardless, credible to be short. 9 is a low 2 short, so it's a second entry short for the bears. You can sell it. It's possible that we're in a bit of a tight trading range here on bars 6 through 9, so we might end up going a little bit more sideways rather than straight down, but still credible to be short. Again, the bulls are hoping that this is a bull breakout, and this is the first leg of a pullback, the high 1, and then a second pullback, and that we're going to get another reversal up. Note that if you did buy above 8 and you decided to use a wide stop and be willing to scale in, you would have had a chance to get out. You were 1 tick away from break even, but a lot of the traders will just exit anywhere up here and consider their trade relatively break even if it gets back up into that area. So it is credible if you're willing to use a really wide stop and just bet against a bear trend, and you would have had a chance to get out. 10 consecutive bear bars, but a tail on the top of 10, a tail on the bottom of 10. And we're probably not going too much lower because of how strong 1 through 6 is. 9 and 10 is strong enough for a second leg sideways down. However, 8 is a pretty strong bar. It's credible, again, at this point, especially after 10, to think we have seen the high of the day. 11, an inside bar, a low 1 short. But do you want to sell below a bull bar? Probably not. Again, it's still reasonable to think we've seen the high of the day, so you can still be short on that premise. But at the end of the day, are you going to add to your position below bar 11, citing low 1 short bear trend? Probably not. It's probably still more of a trading range open, because the move up from 1 through 6 was pretty strong. And so I don't think we're going to collapse straight down below 1. Again, we might go below 1 and get a measure move down, but it's probably not going to go as directly down as you would like it to. So 12, a bear bar, but a big tail on the bottom. Not all that surprising. We initially found buyers at the moving average, which again is not all that surprising. What do the bulls want? Well, the bulls think 9 and 10 is the first leg down, 11 is the pullback, and bar 12 is the second leg down. So the bulls see 2 legs down, and they notice that when they got 2 legs up, we reversed. And so they think it's a trading range. And now we have 2 legs down. And when you're in a trading range, you look for 2 legs in either direction. So most traders are thinking that we got 2 legs, a few legs up, and now we've gotten a few legs down, and that we're going to get some sort of bounce here. An inside bar on 13. So, potentially a wedge, maybe 6, 10, 12, or 8, 10, 12, something like that. Inside bar 13, again, another low 1 short, but I don't want to sell below these bars. If you're short, it's for a swing, and you're betting the opening range is going to at least double. You have to keep in mind the daily range so far is relatively small. It was, about 40 or like 37, 38, which doesn't sound small, but considering, pretty much all of the past couple of days have been well over 100 range. I mean, even today, we can see it was small because the daily range ended up being 135, 136 in the past couple days, 137, 120, 133, smaller to 85, 156. So basically, 4 of the past 5 days have been well over 100 points, and this daily range is 40 points so far, and the bars are 15, 20 points, whatever. So it's really, it's pretty reasonable to think that the daily range is going to at least double, if not triple. So inside bar to 14. It's potentially a third leg down, 9, 10, first leg, 12, second leg, 14, third leg. So it's potentially 3 pushes down. We're right on the moving average, and the Bears have not gotten a close below the moving average yet today. So what do the Bears want? The Bears want to collapse and some sort of measure move down based on the height of the opening range. How likely is that? I don't know. We might have to go more sideways first since we got, the gap up, which is pretty strong, and then all those bull bars. Are we always in long, always in short? We're probably always in short, but it's not overly clear yet. Again, when you get 15, I think, this changes a lot of things, but I'll finish. So 14, inside pattern, possibly a final flag. And then some bears end up buying back shorts, and that caused the bounce on 15 since it was 3 pushes down and we did not get the collapse. 15 is interesting. It's a big enough bull bar closing near its high that it flips the market to always in long. Could it be trading range always in long? Yes, but also the opening range is really small so far. You know that the bar 8 high is a pretty big bull bar closing relatively near its high. So we're probably going to at least the bar 8 high. And we could potentially break out above the opening range and get some sort of bull trend. Now, do I think we're going to get a big bull trend day today? I didn't really think so because we've had a reasonable bounce over the past couple days. So I thought we might be a little bit more sideways up rather than straight up. But sorry about that. But either way, you can buy above bar 15, taking a chance that we've seen the low of the day because your risk reward is whatever, 3 to 1, 4 to 1, something along those lines. Or, you can probably still be short because, again, if we break out to the downside of the 18 bar range, then we're still probably going to get a measured move in that direction. So, it just goes to show that at this point, at the close of bar 15, we're probably always in long, but you could probably be long or short for a swing either way. So the fact that you could be long or short for a swing sometimes tells you that you should be flat, but I do think it is credible to buy above 15. By the time we get to bar 21, 22, that's when you could be long or short for a swing and you should just be flat instead. But I think that on the close of bar 15, it's potentially 3 pushes down. It's big enough bar for at least a second leg sideways to up and a breakout above the II. So it's a breakout mode pattern. The problem is it's towards the middle or the upper third of the trading range, but it's still reasonable to take the buy. 16 consecutive bull bars. We're probably going at least a little bit higher, but a tail on the top of 16. So again, I'm not sure how much higher we're really going. If this was going to be a big bull trend, 16 would probably look relatively similar to 15. It's not surprising that it doesn't because we've had a trading range open and trading range price action, but I do think we're going at least a little bit higher here. And by that, I mostly mean we should get a second leg sideways to up from 15 and 16. 17, an inside bar closing near its low, potentially a lower high from here. If you notice, we have a higher low from 12, and now we have a lower high. So what's forming? A triangle. And we ended up having a triangle open, breakout below the apex of the triangle. And you get that 50-50 chance the first breakout fails. So 50-50 chance this breakout in 27 fails. And you can see we ended up getting the measure move down, which is generally the target when I don't know, maybe we got twice the measure move down, probably even further. But generally, the first target is a measured move down, and occasionally, it'll get lucky and you'll get twice a measured move down. So 18, another inside bar. So an II 17, 18. We had an II 13, 14, and then a surprise on 15. Now we have an II 17, 18. So the bulls are going to try and get some sort of surprise again on 18 and break out above. Bears are hoping, again, breakout mode towards the top of the trading range. They're hoping we're going to reverse back down into it. We might, but I still think we're always in long. Probably buyers not too far below 18 since it's the bull bar. The bears who sold above 14 with a limit order and were willing to scale in are probably going to end up making money. 19, an outside up bar, a bull bar closing relatively near its high. It trades below the low one on 18 and breaks out above it, so it's a bad low one short. Bull bar closing near its high 19. Can you buy? And I would not. I would just rather wait and see if you're already long, you can hold long and take a chance, but you probably have to get out once we get below 21. 19, it's a really good looking bull bar, but the context of it is not all that good. This isn't a spot where you want a reversal bar. This is a spot where you want to see another bar like 15 in a strong rally. You don't necessarily want to see reversal bars at the top of the trading range. You want to see strength and certainty. And here you're getting a little bit more uncertainty with the big tail on 19. So yeah, there were probably buyers below 18 scaling it lower. There were probably buyers at the 14 high when we get there, but this is not that ideal. 20, a bear doji bar. So the bulls see disappointing follow through. They know that 15 and 16 is the first leg up. It's possible 18 and 19 is the second leg up, and that this is just going to be a second leg at the top of the trading range. Maybe they're hoping we get one more leg up, and that leg turns into a breakout above the high. The bears see a low too short. It's a small bar at the top of the trading range, but it doesn't close near its low or anything. I don't think it's worth selling below 19 or below 20. Maybe I'm wrong, but I would probably just not touch that trade. 21 is disappointing. I think it's okay to hold long once you see 20 and take a chance that we're going to end up, getting an upside breakout. But that is a disappointing bar towards the top of the trading range. And then you get 21, more disappointment, bear bar. I think we were still always in long with 20, but 21 makes it a lot less clear what we were. And so it might be still trading range. And again, small range so far today. So the range is probably going to double or triple to either the upside or downside. So I don't really, and look where we are with 21. We're probably basically dead in the middle of it. Yeah, the close of 21 is smack in the middle of the trading range. So it's really not worth doing too much in this area. Probably if you're long, you can get out below 21 and just wait to see what happens. We've had a credible short here and a credible long here, and it doesn't look like either are all that successful thus far. One's at a very small win, one's at a very small loss. So I think it's probably better just to be flat, but you probably could be long for either or short for a swing, just taking a chance that whichever way we go. I thought that at this point, it was probably a little bit more likely that we went to the downside. The problem is we hadn't been below the moving average yet today, but I thought that we were just mildly overbought on the 5-minute chart because the past couple of days we had such a good rally and then a pullback and such a good rally and then another really deep pullback. So I didn't think we were going to get a third day of just a really strong rally. 22 consecutive bear bars. We have a tail on top of 22 and a tail on the bottom of 22. What are the targets? Well, the bar 15 low is the buy climax low. So I'd imagine we're probably going to get there. Obviously, the bottom of the trading range in general, the bar 1 low, the bar 12 low. So we have the higher lows, the 12 low and the 1 low that are going to be targets if we do end up getting there. In the close of 22, it's probably technically sell the close because 21 closes near its low and 22 is a bear bar closing below its midpoint. So probably theoretical sell the close, but it's not all that good. I think 22 puts us probably back to always in short, or probably always in short. It is, the first close below the moving average yet today. So good for the bears to get that, but I'm not sure how much lower we're going. 23, an inside bar, a low 1 short, but I am not taking that. Yes, consecutive bear bars, 4 straight bear closes, but 2 of them are dojis, and we're in the middle of a trading range getting higher lows and lower highs. I would rather wait and see what we get. To me, selling below low 1 short 23 is not a very good idea. I'd rather wait and see if we get a strong breakout below the low of the range and look to sell for a measured move, or see if we get a strong breakout above the high of the range and look to buy. So outside up 24, a bull bar, but a tail on the top and a tail on the bottom. This, I think, is just due to a lack of buyer or lack of sellers below 23, a low 1 short towards the bottom of the range. Probably going to be more buyers in general. 25, disappointing. So doji bar. Doji's 23, 25, and 26 we ended up getting. So again, no one wants to buy above 24 because you're buying the entry bar for the bad high 1 for the bulls on 23. So not really interested in buying up here. And no one's really interested in selling because we're in the middle of the trading range. So same reason a lot of people don't want to buy. And we're right on the moving average. So if you look, 23, 25, and 26 are 3 doji bars right on the moving average in the middle of a trading range in breakout mode. Odds are relatively neutral at this point. And then you get a big bear bar closing near its low, 27. What do the bulls want? Well, the bulls are hoping it's a second leg trap. You can see we got to move down to bar 23 and then pull back 24, 25, 26. 25 and 26 are bull dojis. You just can't see it on this chart, but they are bull dojis. And then a big bear bar closing near its low, 27. So bulls are hoping it's a bull trap and that we're going to get a sharp reversal back up. Maybe we'll trade below bar 1, but the opening range is small enough that we probably will not go that much lower. This is actually one of those really interesting days. We actually broke above the Globex high and below the Globex low today. And so at this point, what are the odds that we're getting to the Globex low, which was 36? So the Globex low is down here. Odds are very low. Again, early in the day when we broke above the Globex high, and here probably only 10% chance that we're actually going to get back down to the Globex low. The Globex high was right here. So by the close of our 6, probably only like maybe a 10% chance we're getting all the way down here. But sometimes that will happen. So 27, a bear bar closing near its low. The bears want it to be a breakout, and they want to sell for the measured move. The bulls are hoping that this is some sort of second leg trap. 28 consecutive bear bars. It is probably sell to close, but again, you look at 15, 16, kind of disappointing, and then you see 27, 28, also kind of disappointing. So it's really not quite as good as it could be. 29, another disappointing bar. So the bulls, they see possibly a second leg trap. It's an inside bar, so it's a low 1 short for the bears. Bulls could argue it's some sort of big high 2, 24 is the high 1, and then 29 is the high 2, and they want a failed breakout of the low of the day and a reversal back up, failed breakout below breakout mode, reversal back into the trading range, and hopefully a breakout above. But 29 does not close strong enough to convince traders to do anything. 30, another disappointing bar. We did trade above 29, but there were probably sellers not too far above 29 following strong bear bars, 27, 28. And then we get 31, another consecutive big bear bar. So what do the bulls want? Well, to me, this looks like possibly consecutive sell climaxes. 1, pullback, 2, pullback, 3, with 31 being the most climactic. And, these sell climaxes have not gotten good follow through initially. So it's moving more in the form of bear channel, but the sell climaxes are not getting good follow through. You can see 24, after the sell climax of 23, you get 24. After 28, you get 29, 30. And after 31, you got 32, 33. So to me, it looked more like we were trying to form some sort of midday reversal. We'd also gotten relatively good bull closes earlier in the day. So as we started to bounce here, I thought there was a 60% chance that we were going to get some sort of midday reversal and try to bounce. But that means there's a 40% chance that we do not do that and we just sell off. And that is part of what happened, or that is what ended up happening today. 32, an inside bar. So bulls want a big, some sort of parabolic wedge and a rally. The first target for the rally would be the most recent sell climax high. So the bar 31 high, which is where we ended up reaching before we sold back off. So bulls were able to reach the first credible target, which was good for them. But anyways, no one wants to buy above 32 because there's such a large tail. We probably are going to at least close the gap at the 28 low. It's only a tick or two above. And again, we will probably get back up to this sell climax high since it's an important magnet. 33, a bull bar closing near its high. Excuse me. Consecutive bull bars 32, 33, but tail on 32, not a good signal bar. Could be up 32, down 32, up 33. So this could be some sort of two-legged pullback. So I don't really think that it's all that good to be buying above 33. 34, a low 1 short for the bears. So they're hoping that 31 was the start of their bear trend, and 34 is the low 1 short for the bears, and that we're going to go a whole bunch lower. What are the odds of us just collapsing below 34? Not very likely. I think if you're going to sell below a low 1 short, even if it's in a bear trend, which this is, best case scenario bear trend, probably not. But if you're going to sell a low 1 short, you're probably still going to need to use a wide stop. So you cannot sell below 34 because that's only really all that good in a bear trend. And this still, it's a bear move, but it still looks more like a leg in a trading range to me than it does some sort of bear trend. 35, outside up, not all that surprising. The bears want it to be 32, 33, and then pull back 34, outside up 35 for a second leg trap, reversal down. The bulls are hoping that this is some sort of at least some sort of move up. They realize that the move down is pretty strong and it's a breakout on a higher time frame. So it's possible that we start to get a reversal up, we pull back, and then we reverse back up again. But what's more likely? I don't know. I thought that we were probably going to have to pull back and then try to get some sort of midday reversal, but the midday reversal attempt never came. 36, a low 2 short. So we had a low 1 below 34. You now have a low 2 below 36 from the moving average, and you're selling near the sell climax high, 31. So again, we're probably in a trading range at this point, but we will also probably retrace to the bar 31 low. So it's not all that terrible to be looking to sell up here. But it's just that, the bar 36 is not what you want to sell below. 37 is disappointing because no one really wants to sell below a doji bar 36. So what do you get on 37? It's a high one buy for the bulls, but it's not a very good high one near the sell climax high, the 31 high. So I would rather wait. 38, a bear bar closing near its low. And you can see we didn't quite touch the moving average on 36. We were a couple ticks off. So we were never able to touch the moving average. Now we have a bear bar closing below its midpoint. Sorry, a bear bar closing near its low on 38. Do you sell the close at 38? You probably can. Potentially, some sort of low 3 or follow through for the low 2, 36. You can take the short, but I would rather wait for follow through like 39. If this is going to work, it's probably going to go a long way because you're betting on a breakout below the wedge, right? So we have wedge 1, 2, 3, and you want the breakout below and a measure move down. So what are the odds we get the breakout and the measure move down? Selling below here before we get, I don't know, up here, probably not all that high. It's a low probability trade, but it's still reasonable to take the short. 39 consecutive bear bars closing near their lows. Do you sell below 39? I think you probably can. But the thing is, if you get a big reversal up on 40, you have to get out. You probably have to buy because there is real danger of a midday reversal here, some sort of lower low major trend reversal. You could argue we had a trend line break with bar 36. So, this kind of trend line, and then we had a trend line break. So the question is, are the bulls going to get some sort of lower low major trend reversal? Or are we going to fall below the wedge and get some sort of measured move down like we might try to do here on 40? So 40, another bear bar closing near its low. So we do have an open body gap, but I don't know. With just an open body gap, I wasn't all that bearish up to this point, but 39 definitely makes a big difference. You can sell the close at 39. And then more follow through on 40. So 3 straight bear bars, 38, 39, 40. The risk is relatively big, but it's still credible to take any of these shorts. And we're closing below the bar 31 low, the breakout point, and the low of the wedge. So it's reasonable to be short, reasonable to sell. 41, another bear bar, but a tail on the bottom. So again, you can be short, but you can see that we're starting to pull back a little bit. So it's possible that we start to pull back here. We still have an open gap with the 31 low, and you can see we ended up having an open gap with the 31 low and the 41 high. Probably sellers not too far above the 41 high, considering we just had 4 straight bear closes. And you can see we got sellers above 42. So selling above 41, probably one of the easier limit order trades on the day if you were to be trading on limit orders. 42 is a low one short for the bears. It's a doji bar though, so I'm not really that sure you want to sell below a doji bar, but we're still always in short, sell the close, sell the market, sell for any reason, bear trend. 43, it's another bear bar. Still sell the market, sell the close, sell for any reason, but we do have basically consecutive doji bars here. Doji bar here, not quite a doji bar 43, but it's not a strong bear bar, so it's a little bit more alarming for the bears. Again, does it mean we're going to go up? No, it just means we might have to stop going down relatively soon. And then a bear surprise, 44, a bear bar closing near its low. So as good as it is for the bears, 38, 39, 40, 41, 42, 43, 44, so many straight bear bars closing near, and with a lot of them closing near their lows, we're probably not going that much lower without a pullback. The bar 79 close was a reasonable sell to close bar yesterday. You could argue those traders had a chance to get out on 81, but I think that the second leg down, whenever it forms, which I think is happening now, might have to get back to the bar 79 close. So I'm thinking we might have to get into that area. 45, another bear bar, but a tail on the top, and then another big bear bar, 46, but a big tail on the bottom. So I don't really want to be shorting as much down here. It's okay to hold short and just get out above the bull bar. Then we get a bull surprise on 47. It's kind of interesting today. A lot of the bull moves had pretty strong bull bars, bar 6, bar 8, bar 15, bar 33, bar 35, bar 47, bar 50, 47 and 49, all relatively strong bull bars, which increased the odds of some sort of reversal up coming later today, but it ended up never coming. Again, we still have an open gap with the bar 31 low and the bar 41 high, so not really any reason to be buying just yet. But 47, I think, is a give up bar for the bears, where the bears are taking profits, expecting at least a couple legs sideways up, maybe an hour or two. Question becomes, is it going to become some sort of trading range to close the gap? I actually thought it was reasonably likely in this area that we were going to go sideways to up for an hour or two. The problem was we never got consecutive bull bars closing near their highs. So I think it's okay to be looking to buy in this area, but you either need 48 to be consecutive bull bars, so 47, 48 consecutive bull bars, or look for a reversal up from the low if we can get it. But 51, 52 is too strong to buy against for the most part. I'll be curious to see if Al marks 47 as a credible buy tomorrow, because after the sell climax being that big, even if you bought above 47, you're still buying relatively low in the range. And we might have to rally all the way up and close the gap at the 31 low, or potentially even higher than that. So I'll be curious to see if he marks that on his encyclopedia trades tomorrow. 48, a bear bar closing near its low. It's a low one short for the bears, but I think 47 is at least going to get a second leg sideways to up. So I would not be all that interested in selling below 48, but we are still always in short. 49, a bull bar closing near its high. It closes above the bar 47 close. So the bulls who bought above 47, they weren't that disappointed in 48, and they ended up buying more above 40, or as 49 was forming above the bar 47 close. So this is a sign of strength for the bulls. Also, we have an open gap right here. So 50, a bull bar, but a tail on the top, a tail on the bottom. It's a low too short for the bears, you could argue, but still probably not all that great. Probably still going at least a little bit higher. And then you can see 51, a big bear bar closing near its low. We're still not able to touch the moving average. So that is important, that we have not been able to touch the moving average, and we have an open gap with the bears. So you can sell 51, bear bar closing near its low. I would probably still personally wait. Bulls exit longs below 51 for sure, but I think I would probably personally wait until I saw 52 to sell the market. So consecutive bear bars closing near their lows, reasonable to sell. If you get a reversal up, did it close below the low? Low 52.65, the close. Yeah, so it did close below. Oh wait, did it? Sorry, I looked at the low, not the close. Okay, so it closed one tick above the low. But either way, 51, 52 strong enough for a second leg down. If you do sell down here, obviously the problem is your risk is big and you're taking the trade really low in what's probably some sort of bear channel, but it's still a reasonable short. 53, the doji bar. So disappointing follow through for the bears who sold below. It was a bull doji as well. So disappointing follow through for the bears who sold. But is this going to reverse this? Probably not. It's not going to reverse all this. So it's not really all that great. And you can see traders don't end up buying the close. More traders end up selling the close, and that causes 54. I think just a lack of bulls buying in general, and more interested in buying below the bar than above the bar is probably a big piece of that. 55, an inside bar, a low one short. We are at that earlier measured move. And then, another bear bar, 56. Again, it's always in short. Bear bars closing near their lows, sell the close, sell for any reason. 57, another bear bar closing near its low. You can still be selling closes and selling for any reason, but it's obviously climactic. Disappointment, 58. With being a doji bar, so some bears might start taking profits. It's okay to be short down here, but it's a little bit of a game of musical chairs, because at a certain point, traders are going to buy back shorts, and you're going to get the give up bar like you got on bar 68. Granted, if you'd been selling all the way down and just holding for always in, your stop would be above the most recent higher low, and so your stop would be above 60, and so you get stopped out during 67. But wherever you sold, you probably still made a large profit, so it's okay to do that. And just if you think it's a trend, pull your stops on the higher lows or the lower highs. So let's say you sold 27, you put a stop above 26, you sell the close here, and then you get this, and then you get a big bear bar closing near its low. So this is a lower high, 30. You can put your stop above 30. I would probably just put it above 28 to be safe, but you can put your stop above 30 or 28. And then you get this, and then once you get 40 closing below here, you move your stop to the 36 high. You get this. You can see we traded a little bit above 41 during 42. So I would say once you see probably 44, I would put my stop above 42. And then you get this, and then once you sell off again 52, you can put your stop here, and then you keep selling off. There's no real reason to exit until during that. So even if you just did that strategy today, it still would have netted you 68 points, which is pretty common on trend days to get that sort of reward if you're trading that sort of way. It doesn't work as well on trading range days, obviously. So 59, disappointment. You can see bears are probably going to start to exit. So 60, again, probably another leg sideways to down from the sell-off down to 57. And you can see basically we got three attempts up. So first attempt up 59.60, second attempt up 62.63, and then on the third attempt up, which happened to be 66, it's a wedge bottom, and that's why you get the huge bull bar closing near high 67. The bulls wanted 68 through 77 or through 76 to be a bull flag and then get a strong second leg up. However, Bulls, every time, we got a rally here and they sold out of their longs. And then we got a rally here and then they used this rally again to sell out of their longs and rally here. And then for a third time, they sold out of their longs. So 3 times bulls are failing. 1, 2, 3. And 2 times they just exited, they bought and they see this, whatever, but maybe they use 69. That's once they exit. Maybe they use this, they exit again. They use this, they exit a third time. And eventually bulls are just going to give up on the idea of a bull flag. Kind of a similar thing over here. If you bought above 15, you didn't, you definitely don't have to exit anywhere in here. You can still hold long for a swing, but 21 is not what you wanted to see. So 21 is really disappointing bar, and it makes it not all that clear if it's always in long or if it's always in short. So some traders will just use the bounce on 22 and exit their longs around the 15 high that they bought during 22, and that's what's causing this selling. So you have to be relatively quick, but you still, you're still probably going to have the option to get out of break even on your swing trades if you're quick. For stop order trades today, 7 made sense, 9 made sense, 15. So if you're selling 7, high of the day, reasonable to take the shorts. Possible low of the day, reasonable to take the buy. Either way, you're betting on the opening range doubling in whatever direction you're holding. 27, probably, you're a tick away from breaking out of the 18 bar range. So if you're selling, as you're selling, you're going to be breaking below the 18 bar range. It's reasonable to take that short and just take a chance that the range doubles or triples to the downside. Follow through, so you could sell the close. I would probably not do anything else until 39. 38's credible, but it's more of a, I'd rather take the higher probability trade at that point, 39. And it's probably just easier management. If 40 is a bull bar, you just get out. And if you're taking trades like 39 or 38, you need really good follow through. So you can sell the close at 39, and then you get, obviously, sell the close 40, 44. It's probably sell below 51 and just get out above the bull bar, but then you get obviously good follow through 52. We never touched the moving average. So in general, bear trend day, bar closing near its low, near the moving average, and you're not touching the moving average, probably a reasonable sell. Then you got sell the close all the way down, wedge bottom, and a bounce 67 from bull give up bar, but it's not worth buying. It's just the bulls giving up. It's just the bears giving up. It's not the bulls buying. The daily chart, not quite outside down. So this is a low 1 short for the bears. But again, I think it's going to be a low 1 short relatively near the bottom of the range. What are the odds we get another 130 point bar to the downside tomorrow and collapse down to 5,000? Probably not all that great. And if we do get it, I think 5,000 will probably be the place we're trying to test, and we'll start to go sideways. The weekly chart, pretty interesting. We're only 40 points away from the open of the week. So a bear close still is very much in play this week. If the bears do not get the bear close, then this will be disappointment, and then probably some sort of bounce, and then a second leg sideways to down. But I still think we've probably seen the high of the year. All right, that's the